What I'm about to share with you can make all the difference between you doing your first profitable deal this year versus spending the next 3 years chasing some shiny object in some market you know nothing about. You see, here's the brutal truth that no one tells beginning investors. And that truth is 95% beginning investors make the same costly mistake. Here it is. They are convinced that their best deals are somewhere else, that they are chasing some hot market found online for the best deals. The truth of the matter may be that your gold mine could be in your own backyard, okay, right in front of you. So in this video, what I'm going to do, share with you my exact 3-rule framework that will help you find good B and C class multifamily commercial deals within driving distance from your home. And probably most important, you need to listen to this, I'm going to help you avoid chasing deals 2,000 miles away in cities you know nothing about. You know why? Because it is extremely risky doing that if you're a beginner. All right, so today is all about finding the best markets to invest in commercial and multifamily. Let's get started. Here we are with rule number one. Rule number one is to stay close to home. How close? A 3-hour drive. Okay, and within a 3-hour drive, you can drive to it and hug the property. You can check things out. You can go visit when you want. It's safe. Okay, 3-hour drive. Now, I know what you're thinking. Okay, do you have two main objections? You're going to say, Peter, in my market is way too expensive. Or, Peter, there are no good deals where I live, okay? That's the mindset that's keeping you from finding these great deals, because there are two things I want you to learn. Number one is every market, no matter where you are, has opportunities, okay? And number two, you are comparing your market to a hot market that you found online. That's 2,000 miles away. You're cheating yourself, okay? Don't do that. All right, the next is, the reason why it's critical to stay close to home is the responsibility factor, okay? There are huge opportunities to invest in multifamily commercial, but there is also huge responsibilities, okay? Huge opportunities equal huge responsibilities. Imagine you have a 20-unit property, let's say somewhere 2,000 miles away, and a massive plumbing break happens and floods the street and Channel 11 news comes and everything. Wouldn't you like to go there and kind of just see things for yourself, the gravity of it? Hey, those things kind of happen when you own a lot of commercial real estate. Or what about this? Let's say the property manager is doing a horrible job, right? And he keeps lying to you, and you know that. If it was 2,000 miles away, how can you handle that situation? You can't. Okay? So it behooves you to be close to home so you can handle the responsibility. Okay, now there is an exception to the rule here. Okay, there's an exception to the rule here. If you are highly experienced, if you have several deals under your belt, if you have an established track record, or if you have a mentor, right, that's exception to the rule. You can go out of state, okay, for example, okay? And the reason why is when you're experienced, you have a mentor, you need systems in place to manage the whole operations. I'm talking marketing, management, maintenance, and the money part. All four of those need to have systems in place because of accountability. Okay, accountability is huge because you're not the property manager, you're managing the property manager. Okay, this is huge. So there's an exception here. Now, let me give you an action item here. Here's an action item to hone in on this, stay close to home. What I want you to do to find your 3-hour radius is put, get let's say you're in the San Francisco Bay Area, very expensive here, right? Draw a dot where you are on the map, okay, of your home, okay, and then draw a 3-hour radius drive, okay, 3 hours north, 3 hours south, 3 hours east, 3 hours west, okay, and that will be your area. How do I know it works? It's because we have a student named Dave. His picture will appear on the screen. He's a local truck driver. He lives in the Bay Area. And guess what? Being in the Bay Area was no excuse for him. He ended up buying, I believe it's 5 or 6 properties, over $7 million worth of properties, okay, within just a few years. So if Dave can do it, So can you. All right. Okay. Let's go on to rule number 2. Got questions? Simply text the word Peter to 833-942-4516 and we'll help you. Here we are with rule number 2 that will save you so much time, okay, in finding the best markets and the best deals in those markets. Rule number 2 is to focus on B and C class properties, okay? Forget the A class, just forget it, it's not for you, okay? B and C class, if you are beginner, is the sweet spot for you, okay? Let me briefly describe what B, C, and A class properties are so you understand and know how to look for them in your market. Okay, let's start with B class. B class is, these are solid property with middle class people, nice cars in the parking lot, well-maintained building. The tenants are reliable. They all have pretty good jobs, right? When you buy it, there's day one cash flow because there's not a lot of repairs to do once you buy it. And you can do small improvements to get the rents up over time in small increments. Okay, so just the overall solid middle of the road multifamily or commercial building. Okay, let's talk about C class. Okay, C class is known as value add opportunities. Means properties that you can add value to, okay, by renovating kitchens and bathrooms, exterior improvements, and drive up the rents, and then force the appreciation, and then do a cash out refi and go buy another property. Okay, that's the purpose of a C-class property. These are older buildings. Okay, they have lower rents. Okay, lower rents, and guess what? A lower price. Okay, some people will call C-class buildings that are you know, you can include Section 8 into these C-class properties. Okay, lower price, right? Meaning that there's a lower barrier to entry for beginners to get into. Okay, here's the goal. The ultimate goal for a C-class property, 'cause this is ideal, is to find a C-class property, a property that you can fix up, but located in a B-class neighborhood. Okay, so you can take a lower, maybe a property that needs some physical condition improvement in a good neighborhood, and then improve the property to its B-class status, get the rents up, and you'll be in very good shape there. Okay, so that's the ultimate goal. All right. Okay, now let's talk about A class. Okay, A class is not for you, not at least not yet if you're a beginner. It's for a person like me. A class for me is estate planning. These are properties that I use to do capital preservation, putting money away and just keeping it there, nice, sound investment, and just focusing on appreciation over the next 10, 20, 30 years. Okay, all right, so high-end buildings, they're very expensive. And when they're very expensive, you have a high down payment. So you can see this is not for beginners, okay? The cash flow is small. And the cash flow is small is because it's what we call an appreciation play, okay? So not a value add play, okay? Or it's an appreciation play where you buy it, you're gonna hold it, long-term loan, and maybe use it to pass down to future generations, okay? Beautiful building, expensive, little to no upside, very little cash flow, not for you, okay? At least not yet, okay? All right, so rule number 2 is I want you to focus on this sweet spot in your market, whether it's a hot or cold market. The sweet spot is B and C class. All right, so focus on that to find the best deals and the best markets. All right, let's go to rule number 3. The best time to invest in real estate is always 5 years ago. The next best time is today. Let us mentor you so you can get started investing right now. Click the top corner. All right, here we are with rule number 3, which is my favorite. Rule number 3 is boots on the ground intel. Intel is short for intelligence. Boots on the ground means you gotta be there, okay? There are lots of real estate investors out there on YouTube that talk about the importance, and all they do is look at internet data for neighborhood, demographics, jobs, economy, and construction. All right, so that's not enough. Okay, so an online investor is a misinformed investor. Okay, because Real estate is a local business, okay? And local knowledge is everything, okay? It's so important. Being in this business 25 years, I know for a fact you just cannot get on your computer and decide if an area is good or bad. You just can't. Just not enough information, okay? Tell you one quick story. Um, I bought a property and I flew there. Before I flew there, I can see it was somewhat rural in an area. Just wasn't sure what I was attracted to with the numbers, so it warranted me to fly out there. Well, I got there at nighttime, and then when I got out of the van from the airport, I looked around, and guess what I found? I found a bank on every corner. I couldn't see that online. I ended up being one of the best deals ever. Had I just focused online, I wouldn't have gone there and invested because there was nothing there. Okay, it looked too rural. Okay, also on that property it had the most, I guess, revenue generating super Walmart in that region. Okay, and the Poplar is very small, but why was it? Why did that Walmart produce so much money? All right, so we had to discover why, and we found out. We bought the deal, and we became very successful in that deal. Okay, so boots on the ground is so important. Right, I'm going to share with you my three-part Intel system where we can gather intelligence, gather information to make the best decision. Here's part one. Part one is to visit the property. Okay, no brainer. Visit the property, look at other properties, look at your competition, look at the condition of the properties, talk to locals. All right, so several times you can actually go visit a property and walk around, park your car somewhere and walk around and maybe talk to some of the tenants of other buildings and just say, how do you like living here? And just have a chat with them. You will learn so much. Okay, if you were to go to a local cafe and talk to one of the waiters or waitresses, guess what? Most likely they're renters, okay? And they can tell you where to live, where not to live, what the best buildings are, and what the worst buildings are, okay? They'll tell you all that because they're renters. So you can learn a lot by having boots on the ground, visiting the property, visiting the area, okay? And lastly, the first step is to trust your gut. If your gut says this area is sus, if this area is you don't have a good feeling, I want you to honor that that perception, because you are probably right. Okay, that's number one. The second part is talk to local property managers. Okay, at least two of them. Okay, because they know the neighborhood trends. They know if the rents are going up, and worse, they know the rents going down. They understand the demographics. Okay, meaning that they can tell you who your tenants will be. Okay, of this nationality, of this economic level, coming from this company. They'll tell you exactly, because this is what they do every single day. They'll tell you the occupancy, what to expect, right? Is occupancy increasing? Is there a demand for your apartments, or is occupancy going down? So important to learn this from the local property managers. And most times, this is difficult to do on the phone. If you can get your local property managers to the property and walk around, you're going to gain 10 times more information than you would just being on the phone. Okay. And lastly, because property managers deal with applications for tenants, they can tell you where the jobs are coming from as they're looking on the application where they work. Okay. So this is called intel. This is intelligence you want to gather before you make a decision, information you want to gather to make sure you're in the best neighborhoods. Okay. Number three is a pro tip. Okay. You probably won't expect this one, but I have learned so much by doing number three. It's to interview both commercial and residential agents. Okay. Commercial, you probably, oh yeah, Pete, it's no brainer. But how about residential agents? Okay. And you need both perspectives. Okay. So the commercial broker can tell you, high level, what's going on in the neighborhood, and where things are trading for, what the market cap rate is, what the cost for things would be. But the residential agents are for my tenants. Here's why. Okay, residential agents, they deal with sales of homes. Okay, they can tell you if a neighborhood, if the prices are going up, if people are looking to buy homes, or people are moving out, if there's foreclosures, if there's struggles, right? If there's good schools around to attract the kids. So all their perspective is pretty much matching what I want to draw into my property. Okay, so their perspective is probably more important than a commercial real estate perspective, in my opinion, for what we're trying to do. Okay, find the best markets. Okay, got it? All right. Ever wondered how pro investors find and analyze deals for maximum profit? How to secure financing even if you're a beginner? Or attract and keep tenants for steady passive income? Commercial Real Estate for Beginners delivers simple, actionable steps to master it all. Tap the link on the top corner for your free copy today. Okay, I just shared with you the 3 rules. Rule number 1 was to focus on being close to home. Rule number 2 is to focus on B and C class properties. That's your sweet spot. And rule number 3 is to get boots on the ground, intelligence, information there. All right, okay. So I just gave you a whole lot of information. No excuses. You now know what to do. Focus on the sweet spot. Okay, do your work there, and then have the mindset that there is something in your neighborhood. So qualify your neighborhood first, your area, your radius, okay, your 3-hour radius before you go out and looking at properties 2 or 3,000 miles away. Got it? All right, everyone. I hope you enjoyed this video. Thank you so much for being with me this long. You are my favorite, and I'll see you at the next video. Would you like to work with me? Every successful commercial real estate investor has a mentor. Learn more about my Protege program right here.